All right, welcome to Sunabi FX Forex Basics video. All right, and I'm going to start with when to trade the Forex market. All right, the Forex market is open 24 hours a day, 5 days in a week. All right, that's Monday, Tuesday, Wednesday, Thursday, Friday. But you cannot be trading 24 hours a day and 7 days a week, 5 days a week. The market closes from Friday in the evening and opens back again on Sunday in the evening. All right, so you only trade between Sunday night, which is 11 p.m. in the night, and Friday to Friday night, which is the same 11 p.m. in the night. All right, so that's how the forex market is open. But this, despite it's open 24 hours a day, it is broken into three aspects. All right, now I'm using Nigerian time because I'm speaking to Nigerians, but you can decide depending on the country you are. You can Google the time frame and everything. All right, so we have majorly three sessions that to make majorly three sessions. We have the Asian session. The Asian session deals with the Asian countries and their currencies. It, according to Nigerian time, that will be 11 p.m. in the night till 8 a.m. in the morning. All right, this market is open from 11 p.m. in the night to 8 a.m. in the morning. You can choose to trade that, and during this time, most of their currencies are active. Asian countries' currency are Japanese yen, you know already. You know most of these Asian countries and their currencies. So their currencies are active in those times. All right. So the next one is the London session. The London session deal with the Great British pounds, euro, and this thing. So their own is active from 8 a.m. in the morning till 5 p.m. Nigerian time. All right. So the next one is going to be the New York session. The New York session starts from 2 p.m. in the afternoon to 11 p.m. in the night when the Asian session is opening. Have you noticed that when the Asian session is opening, the New York is closing? When the Asian session is closing at 8 a.m., the London session is opening. All right. So that is how it works. That is how the market keep rolling till 11 p.m. on Sunday and it closes. So when I say when will I trade, when can I trade, these are the forex trading session. And depending on the currency you are trading, it depends. The US dollar is here, the Great British Pound is here, and the Japanese yen is here. So these are just most of the currencies. And in forex trading, like I told you, we trade currencies on pairs. I will just explain this because I'm not going to create a different slide on this. We trade currencies in pairs, and each country have their own currencies. All right, like I think I mentioned it in the previous video. We have the major and the minors. All right, the majors are currencies that have US dollar. For example, USD. You see USD slash JPY. All right, you see US slash JPY. That is a major currency. A major currency. That is the US dollar versus the Japanese yen. That is how currencies. You will see something like euro and what now? Euro JPY. These are cross currencies because it doesn't involve the US dollar. You can go and just do a little research on currency pairs, do a little research on currency pairs, major and minors, and get the information for yourself. All right. So they apply to all these sessions and etc. etc. This is just a basics video, and I will indulge you to do a few research. All right. Be somebody that studied. These short videos I'm dropping will not do all the work for you. I gave you a site, babypips.com, that can help you with the basics. Go to babypips.com and read up in case you are not catching up at the pace of this basics video. All right, I recommend it. I recommend it a lot. All right, so despite let's forge ahead. Despite this market is open in these three sessions, you cannot sit 24 hours and trade. So you're saying, what is the best time to trade? The best time to trade, that's what I'm going to be showing you now. All right. Now, what is the best time to trade the forex market? The best time to trade the forex market is during market overlap sessions. Market overlap sessions is when two trading sessions are open at a time. This causes volatility in the market. When there are two sessions, two markets that are open at the same time, let's say, for example, London and New York open at the same time, that is, if those two market, no one is close, they open at the same time, it's called market overlap. These times is when the market is very volatile. All right, and majorly in according to Nigerian time, when we have this possibility is between 1 p.m. and 5 p.m. That is the best time to trade. I think I caught over 40 pips today during this overlap session. Okay, let me go back and show you to the time frame. Now, when you come back here, you now realize that during this, the London session opens 8 a.m. and closed by 5 p.m. Is that not so? That means from 8 a.m. when you wake up, it's open to 5 p.m. Now, the New York session opened 2 p.m. and closed by 11 p.m. It means between 2 p.m. to 5 p.m. All right, these two sessions are balling. So you can see high volatility and money in the market. You can easily see the market going up and down, etc., etc. So that's what we that's what we call overlap session. Overlap session. All right. Now, that is the best time to trade, and you can trade any of the times. Is not a rule, is not compulsory. You can trade any of the time. It's just for you to have a head knowledge of it. And please, majorly I will recommend for the strategy I'm going to be teaching you, you can only trade 8 a.m. to 5 p.m. 8 a.m. to 5 p.m. Please and please don't exceed these seasons. 8 a.m. to 5 p.m. 8 a.m. to 6 p.m. if possible. 8 a.m. to 5 p.m. Don't exceed this. I don't enter any trade before 8 a.m. All right, and I exit every trade once it's 6 p.m. because this is a scalping strategy. This is not a swing trading strategy I'm going to be teaching you. All right, when we get to the swing trading strategy area, I can tell you scalping is going into the market, get your profit sharp and go in 15, 10, 1 hour, 2 hours, 3 hours, 4 hours max. You are out of the market. All right, these are the kind of traders we are. We don't spend time on the screen. We don't hold the trade for a long period of time. All right, so let's go ahead. Now, where to trade? Now you can be saying, oh, you've been talking about the forex market, so where do I trade? Now we have two major platforms we use to analyze and also execute trades. We have two major platforms we use to analyze and also execute trades. The first one is what we call the MetaTrader 4 app. The MetaTrader 4 app. The second one is MetaTrader 5 app. Now, the MetaTrader 5 is just an upgraded version of the MetaTrader 4 with a lot of tools. So majorly for a beginner, I will recommend you even stay away from the MetaTrader 4 because we're not going to be using it that much, right? But although I'm going to be posting 2 videos, I'm going to get a YouTube videos that explain how to use MetaTrader 4 and how to use MetaTrader 5 for you. I'm not going to create a separate video on it. I'm going to give you a video with link to go and watch how it works, or you can even do yourself a favor and just go how to use MetaTrader 4 on YouTube. It will be done. You will see how to maneuver your way, how to go and learn how to place a trade, how to execute a trade, how to set stop loss, how to set take profit, how to etc, etc. I will do it. I will send the video, but majorly I use MT5. This is what we'll be using for this strategy, the upgraded version, because of the tools that are involved. Now to trade this, once you get these apps, you cannot just begin to trade. You need a forex broker to trade live and connect your account to the live market. All right, you need a forex broker. A forex broker, yes, you need a forex broker. A forex broker is like a mediator between you and the live market. They help you manage your account. You see, you are a retailer. You don't have enough funds to manage your account yourself and cater for the expenses of trading the live market with the big banks. All right, so you don't have the huge capital. So the people that have the capital are the forex brokers. They are the one that will help you to serve as mediators between you and the live market. All right, so let me go a step further to explain the forex brokers. Now, brokers are mediators between us and the larger market. They help us to manage our account and help us execute trade for a fee called spread. Now, what forex broker help us to do is, like I said first, they are mediators. They mediate between you and the live market. You want to execute a trade, the broker is the one that will help you manage it. Again, they serve as the middleman. between you and the larger market because you don't have enough capital, all right, to buy yourself, to buy and sell currencies yourself. So the broker will connect you to the larger market. Now, apart from that, they help you manage your trades. If you place a stop loss, you place a take profit. Stop loss means stop loss, all right, stop orders, where if you put a trade where you place a stop loss. I'll explain that later, or you can just go and read up again on that stop loss, take profit. Just type market executions, all right, and you will get a lot of information on that. Please be doing these assignments, all right, it will help you. Now, they help you manage your account and also help you execute your trade. They can also help you execute your trade, maybe if you put sell limit, all right. So just go on Google, go on Baby Pips. Like I said, please go and read on Baby Pips. Now you will learn what we call market orders. Market orders are the instruction you give to your broker to do on your account. For example, you can set to place sell limit, stop orders, etc., etc., take profit, and etc., etc. All right. So now they do all these things for a fee called spread. Now, anytime you're trading, there's what we call the bid and the ask price. Now, if you have a USD, for example, okay, let me see. If you have USD JPY, USD JPY, all right. Now, there's what we call the bid and the ask. The difference between bid and the ask is what we call spread. All right. Now, the bid price is the price the broker is willing to buy from you, and the ask price is the price that the broker is willing to sell. All right. So, or whatever case it may be, I might not be able to explain it here completely. You can just go and check it again, the bid and the ask price. Go to your MetaTrader 4, it will show you. So there's a little fee they charge, but the little fee is not important as long as you are a very good trader. You will not even feel it. You will not even know, right? Just little drops, little cent, little cent, not even up to $1 for a small account. Except when you go larger, maybe $5, $10, little amount per trade. All right. So now we'll be using majorly two brokers for this course and everything. We'll be using number one Forex for you and number two Xness. I'm going to be sending their links again. Make sure you take them serious. Make sure you take these things serious. We'll be using two major brokers, Forex for you and Xness. All right. So that's that for brokers. You can go ahead again, place your research on brokers and read up what it is about brokers, what they do, how it relates to Forex trading, and etc., etc. All right. So how do we trade? The last question on this session is how do we trade? Now, I told you our major responsibility is to be able to analyze the market. All right. Now, you know a lot of things. What is Forex trading? Where do we trade? When do we trade? What do we trade? Why do we trade? We talks about financial freedom and a lot of things. And now is how, which is the most important thing. You know where we trade already. We trade on MetaTrader 4. You know who can trade already. You know when we trade already. But how do we trade? How do we execute trade? Why do we come on? Where do we do it? We do it on MetaTrader 4. Then when you come on MetaTrader 4, what do you see? What should you do? How will you know the direction of the market? This is what this section is about. And this section is going to give birth to the next section I'm going to be teaching you and going in depth before you be qualified to step into the course proper. All right. So, majorly, there are three ways we predict the direction of the market. Number one, we predict the direction of the market based on fundamental analysis. And fundamental analysis deals with major economic factors like interest rate, both micro and macro factors. We use these micro and macro factors to predict the overall direction of the market. All right. But for now, this is not your business. All right. Stay away from it. You don't need this in this course. You don't need this one in this course. You don't need fundamental analysis in this course. Then the next thing you need to take note of again, how we predict the direction of the market is through sentimental analysis. By sentimental analysis, we make use of the general perception of traders concerning a currency. Maybe, for example, if everybody is buying or selling GBP USD and we use tools like currency strength index, and we use commitment of traders reports to know the direction of the market. And again, in this course, that particular section is not very important to you, so leave it. When we get, maybe when you get to pro trading level and etc etc, you can know about that. But for this course, what we major on is this technical analysis. And technical analysis, majorly we use past data to determine future outcome of the market. We use history, reoccurring patterns in the market to predict the future of the market. Now, technical analysis is built on the ideology that history always repeats itself. And you can agree with me that always, history will always repeat itself. So we capitalize to use history to predict the direction of the market. And how we do that? Over the past how many years? Let's just say over the past 30 years, 50 years, 20 years, the market has consistently printed a specific pattern, a specific way, has repeated itself on the live charts for a period of time. And based on this reoccurrence, we can predict the direction of the market based on this past data. We can use this past data to say, okay, this thing has happened before. We know it will happen again. All right. So we know a pattern that reoccurred before, it will happen again. This is the basis by which we use technical analysis, and we use patterns, charts, candlestick, and a lot of other things like that to predict the direction of the market. So in the next session, I'm going to be introducing you to technical analysis proper, the tools you need, and everything to do a proper technical analysis. I know you will love it. All right, thank you very much. Of all the topics I explained there, please go and do a little bit of research on each of them to get a more vast understanding. Thank you, and see you in the next video. Cheers.